Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because we just had another new high for global liquidity this week. And I know a lot of investors don't care right now because sentiment is extremely fearful and there's a lot of concerning narratives out there. But this isn't the first time we've seen this. We actually saw the exact opposite back in December of 2024 when we were talking about how Bitcoin can sometimes diverge from global liquidity in the short term thanks to specific catalysts. And at the time, the catalysts were strategic Bitcoin reserve and the golden age of crypto narrative. And many investors were ignoring the global liquidity downtrend because at the time, the market is extremely greedy. And we were talking about how bull markets are full of leverage washouts and sudden corrections. And it would not surprise me if we saw one soon. And now that we're in the exact opposite scenario with global liquidity increasing significantly over the past few weeks and sentiment being extremely fearful because of tariffs, just like when sentiment was extremely greedy because of the strategic Bitcoin reserve narrative. And each and every time we've seen fear like this in this market cycle so far, it's been a buying opportunity. The same way each and every time we saw extreme greed, it was a local top and a profit-taking opportunity for those that wanted to. But I don't blame investors for having a hard time and being fearful with the price action we've seen in the S&P 500 and the constant bearish articles from the media. This one here talks about crypto plunging as Trump tariff medicine brutalizes global stock markets. But when you actually look at the price action, it doesn't look like Bitcoin is plunging at all. If anything, Bitcoin looks incredibly strong when accounting for what the S&P 500 has done so far. And this doesn't mean that Bitcoin can't eventually follow if things get significantly worse. But we do have to acknowledge the relative strength we're seeing from Bitcoin here, especially because this is not how Bitcoin used to trade. And I know a lot of people are saying this is just like the March 2020 crash, and it's only a matter of time before Bitcoin rolls over. But either you weren't around for the March 2020 crash if you're saying that, or you forgot that Bitcoin traded perfectly in line with the S&P 500 during the entirety of that crash, and even bottomed a week and a half before the S&P 500 did. So if we saw the S&P 500 crash by 30% in March of 2020, we saw Bitcoin go down over 60%. So by comparison, seeing a roughly 25% correction on Bitcoin here, while the S&P 500 has already seen a 20% correction, is actually quite impressive in my opinion. We also have articles talking about massive Bitcoin ETF outflows, losing $326 million amid evolving dynamic with TradFi markets. But when you actually take a look at the outflows, it's nothing compared to the outflows we saw during the profit taking in February, and it's nothing compared to the inflows we've seen throughout 2024 and the impressive demand we've seen for these ETFs. And I am shocked that we're not seeing way more outflows now that these are spot traded ETFs that investors have in their brokerage accounts and can easily sell. We also have this article talking about Bitcoin being on the verge of the largest price drawdown of the bull market. But when you actually look at the chart, we're still maintaining our macro bull market structure. We're holding above the previous March high. We're holding above the 50-week moving average, which has been the line in the sand this entire bull market and the previous bull market. We know Bitcoin stays above the 50-week moving average during bull markets and tends to bottom around the 200-week moving average during bear markets. And this is exactly why I called Monday's free weekly report the line in the sand, because we can try and predict the future, we can try and parse all of these narratives, or we can just look at what the data and chart are telling us and adjust our view once it gets invalidated. And an extreme fear correction is not complete without these lower and lower price targets. Here, this article is talking about a Bloomberg analyst predicting Bitcoin could sink back to 10K. And this is something you never see during the extreme greed periods where it would be potentially a better time to take profits when everybody is excited. All of the articles are talking about Cathie Wood's $1 million Bitcoin target, Plan B's 500K Bitcoin target. MicroStrategy buying all the Bitcoin and Michael Saylor's $10 million Bitcoin target. But then once the market is fearful and everyone is looking for an excuse to sell so they can buy back lower, we start seeing these lower and lower price targets. And I actually found an article from August of 2024 from the same Bloomberg analyst saying that Bitcoin is rolling over and signals are anything but encouraging for the bulls. And if we look at where Bitcoin's price was when that article was written, it was at our last local low before Bitcoin went on to a huge rally. So could this article be right? Could Bitcoin be going all the way to 10K? I mean, anything is possible. A meteor could hit the earth. We could discover time travel, but I don't think it's that useful of a concept to try and map your strategy around, because I don't think the likelihood of that is that high whatsoever based on current data and Bitcoin price action. I'd be very surprised if we even got a chance to buy again in the low 40,000s before the Fed pivots back to QE and starts increasing the money supply again. And this is exactly why we can't rely on our emotions and sentiment to make good decisions. Bitcoin has been quite resilient recently, although it may not feel like it. Bitcoin is the most secure it's ever been, with the Bitcoin hash rate hitting a new all-time high. And you could actually make an argument that the crypto bull market hasn't even started yet, because we never even saw a new high on global liquidity. Global liquidity still hasn't traded above the high we set in February of 2022. It got very close to doing so in October of 2024. It got very close to doing so quite recently, but we actually haven't even seen a new all-time high on global liquidity yet. And a lot of that is driven by the fact that the Fed is still reducing its balance sheet, and Bitcoin has been able to have this entire rally while the Fed was doing quantitative tightening. And we know that Bitcoin's best moves and the best rallies have been during balance sheet expansion, like 2020 and like 2013. So for me, I'm still quite happy with my holdings. I have plenty of upside exposure, but still have a good amount of downside protection. On Monday, I bought a little bit more Bitcoin, Ethereum, and Solana because my system called for some cash deployment for this week's portfolio rebalancing, because my cash target is around 30%. And if you're interested in my portfolio management system, you can check it out in the video description. We still have early bird pricing while I work on these last two modules. But if we zoom out, I still think Bitcoin is in a fair value region. Are you going to get another chance to buy in the cheap area? Maybe, but I wouldn't rely on it. Are you going to get another chance to buy in the very cheap region? Very unlikely in my opinion, but I'll happily change my view if the data or price action calls for it. I think it's still too early to be proclaiming that the cycle is over and that Bitcoin is going to be going a lot lower from here. I also think it's too early to say that Bitcoin is going to enter another huge parabola and rally until the end of the year. If anything, I think there's a lot of sidelined investors that would pile in if Bitcoin started showing some signs of strength, and that would make Bitcoin rally a lot sooner. But as of right now, as long as we're chopping around here in no man's land, I'm still sticking to my base cases for this Bitcoin cycle. So we'll see what happens with Bitcoin, but I remain bullish because I do expect global liquidity to break out above that February 2022 high sometime soon, especially with the weakness we've seen in the US dollar index, which we know increases global liquidity. We're seeing more and more Fed rate cuts priced in, and all of the fear and uncertainty surrounding the economy and stock market after this recent drop should only increase the likelihood that we're going to get those sooner rate cuts. We know that inflation has been relatively stubborn, but trueflation, our leading indicator, is quite low at 1.34% year over year, so the Fed should have more room to ease. We're also seeing quite a bit of weakness in the labor market, and we're not even seeing the federal layoffs in the data yet. And I think that is going to be incredibly deflationary and give the Fed even more room to ease as well. And of course, a big drop in the S&P 500 is incredibly deflationary also, as it forces those companies to perhaps start doing more layoffs and reduce spending. So that should give the Fed some leeway as well. So we'll see what happens. Bitcoin is still above that March high, still above the 50-week moving average, but still below our previous range and the 20-week moving average. And our next breakout in either of those regions will decide the next direction. I think we go higher, but I'm open to being wrong. if the price action calls for it. Ethereum still looks pretty weak, struggling to hold our old range mid at about 1500, and it looks like it wants to start heading towards the range low. Ethereum versus Bitcoin is not looking much better. The only remaining support we have is the 2019 bear market low, and I can't believe we're seeing Ethereum trade at these levels versus Bitcoin. As for Solana, it's doing a bit better. It's still holding above its 200-week moving average, and it's trying to reclaim its range low. Hopefully it does soon. The sooner it does, the better. We don't want to start seeing acceptance below its range low that it's spent almost a year in. Solana Bitcoin is holding its December 2023 lows. Hopefully it gets a bounce sometime soon, but of course a lot of that is going to rely on what Bitcoin does. Price action has been incredibly painful across risk assets over the past few weeks, so we'll see how this develops going forward. But as we look forward, the federal government is still running huge deficits, and that trend is only getting worse. And if we do see Doge or some other programs reduce the deficits, I think it's just going to break something and result in even more debt having to be issued in the future. And eventually that debt is going to have to get monetized. So exponential debt growth means exponential money supply growth and currency debasement, which is bullish for our risk assets like the S&P 500 in the longer term, and bullish for our fixed supply risk assets like Bitcoin as well. But as always, let me know what you expect. Will global liquidity put in a new high sometime in the near future, and will Bitcoin follow it? I think with everything we're seeing with inflation, the labor market, the stock market, and the economy, the Fed and central banks around the world are going to have no choice but increase their balance sheets, increase the money supply and ease, and that should be an incredible catalyst for Bitcoin. We just have to survive the volatility and chop in the meantime. But as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.